Hey guys, it's Kiana Montgomery, your mortgage goddess, and I'm here to answer the burning question: what's going to happen in the housing market in 2022? Is it going to crash? What's going to happen? So let's talk about it. Let's get into it and talk about what the experts say and what my take is on it. Okay, again, I'm Kiana Montgomery. I'm a mortgage goddess. You can follow me on Instagram at Mortgage Goddess Kiana, Qiana, and you can also reach me on my cell at 267-701-1189. And please subscribe to my YouTube channel. You can go there. You can see a lot of informational videos about home buying and the whole housing process. Things like what's a VA loan, what kind of documents do I need to get approved, where can I get the money for the down payment, and much, much more, okay? So subscribe to that YouTube channel, and then you can get notifications when I do more informational videos, okay? So let's get into it. First of all, why should you listen to me? Again, I'm a licensed loan officer. I've been a loan officer for 10 years. Also been a investor. I've been a landlord and owned property for over 20 years, and I've been your fabulous Philly flipper for the last 5 years. Okay, so I'm immersed in the market. I live it, I breathe it, I sleep it. So I wanted to tell you what's my take on it, because everybody wants to know what's going to happen. So we want to talk about some facts about what's going on and what the predictions are and why, and then back it up with a conclusion of what's going to happen in the market. Okay, is it going to crash? So one of the things that we want to look at is what is the predictions for the market. Okay, so we've got some interesting information from the National Association of Real Estate Agents, okay? So, of a realtor, sorry. And they expect the economy to continue to expand, right? So we're still doing good. They're expecting the economy to still do well. It's going to expand at a rate of about 2.5% in 2022, okay? And the Federal Reserve is going to start tightening up some of their monetary conditions, like doing rate hikes to try to slow down inflation, okay? Because basically when they gave out all the money for the stimulus packages and stuff, all that money, they basically was printing money. It makes inflation, it makes the money worth less. So now they got to tighten it up by doing a couple things, and one of the things is raising the interest rates, okay? People were literally fighting over houses because the interest rates were so low. Okay, so now they're like, okay, we don't need the interest rates to be that low for people to get out there and buy and keep the market moving. So they're gonna start to increase a little bit. So the 30-year fixed rate mortgage is expected to increase to about an average of like 4%, which is much higher than what it was last year, which was an average of 3%, but that's still relatively low. Think about this, you guys. In the year 2000, the average interest rate was 8%. Can you imagine? That was what, 22 years ago, the interest rate was at 8%, and we lived and we survived. So there's a lot of room for growth, and people will still buy houses. People bought houses back then. So, that's still relatively low. So 4% is still a low price. So you're still gonna have people buying a home, but the interest rates are going up. Okay, so keep that in mind. So another thing that they're saying is the existing home sales are expected to decrease slightly because of those rates increasing. Okay, but right now, think about it. If you're in the industry, you know. If you don't, you're not. You don't know that when a house goes up for sale, there's maybe 10 people, sometimes more, that are putting in an offer on this house. So if it goes to 3 people, the house is still going to sell, right? There's just not going to be that fight in making the price of the house go crazy. It's going to just, stay at a modest rate, but it's not going to make it go down, okay? So the housing inventory, they're building new houses as usual. That's going to slow, but it's not going to increase. I'm sorry, it's going to increase, but it's not going to increase so much that there's so much inventory. The inventory is still relatively low, you guys. So they're still going to have more buyers than sellers. So stuff is still going to move. What does that mean? The prices are going to still stay pretty steady, if not increase still. They're predicting that the housing prices are going to increase. That is what the National Association of Realtors says. So they're also saying that the employment is still going to grow. The unemployment rate is still going to fall. So that meaning that the employment is good. So that means people are working, they're still making money. So this is a strong, backbone for everything to grow on. Okay, so if you put all those things together, what does that mean? does it sound like we got a crash coming, or it sounds like we still got a strong market? You guys, I know a lot of people wish the market would crash because they have missed their opportunity to get in earlier, so they're just waiting. But I'm telling you guys, this is why I'm doing this video. Please do not make that mistake of continuing to wait. I have clients that were pre-approved in 2020, and because of how things were so crazy, they said, oh, I'm going to wait. And then in 2021, the rates were higher and the prices on the houses were higher. But the rates were a little bit lower, but the prices on the houses were much higher. So right now, they're expecting for the rates to go up. So, and the prices of the houses are going to stay the same or slightly increase. So what does that mean? If you wait, you're just going to end up paying more for the house. And interest rates going up can really affect you over time. This is a 30-year mortgage. So if you go in at a higher interest rate, you're really going to feel that over the years. So I'm just wanted to do this video to let you guys know my thoughts and what the experts are saying, so you will not make the mistake of waiting and being on the sidelines and missing your opportunity. And sometimes you may never end up being a homeowner because of things like that. You wait and wait and wait. Then later on, maybe something happens with your job or something happens with your health, or you just got a good opportunity more, and now the rates are so much higher. So I say all that to say, get off the sidelines, you guys. If you want to become a homeowner, do not let anything stop you. Please do not let the hope of some type of market crash, market bubble, all these different things make you wait on the sidelines for some great deal where you're going to swoop in. I don't know the last time the housing market crashed before 2008, 2009. I'm sure it did, but it's not the way the stock market is, where it's like crashing every 10 years. It doesn't do that. If you look on a graph of house values from the 1960s to now, it's like almost straight up, okay? And in the last couple years, it's like a super incline. So those that got in, great. So it's like, okay, you got in there, you probably got some good equity in your home. You can do some refinancing while the rates are still low. Get you some more houses, take some cash out. Get you some more houses. Pick up these houses. It's like a game of Monopoly, you guys. Get these houses, build them up to get you a hotel. As you're going around this board, pick up these houses, get these properties, okay? That's what I said. So I would love to hear what your thoughts are, what questions you have about it. And, if we can debate about it. If you disagree, we can definitely talk about that. Why, do I believe that it will not crash, and why you think it maybe will? We can talk about that, because this is my thing. Like I said, I love it. Live, eat, breathe, sleep, real estate, okay? So I'm going to wrap this video up. I just wanted to talk to you guys about this interesting topic and see what your thoughts are, let you know what I thought about it. And let's talk more about real estate and getting you into a home. Please do not let credit stop you. Please do not let this hope of a market crash stop you. Please do not let debt to income stop you. Let's talk about how to get you into a home, okay? All right, thanks for tuning in, guys. Have a great evening.